What's up, legends? We are back in Dubai, and I have to tell you, I love it when we nail the start of the week trade and we know we're in the 3-day swing and we can just relax until midweek reversal. Well, can we relax, actually? That's what I'm going to get into in today's video. I'm going to show you the breakdown of what happened after my last update, where the actual entry was, and then I'm going to have a look at the current price action for Bitcoin. We'll cover Ethereum, and I'm going to show you where the entries were, what to do if you missed out, and what to expect next. So let's get into it. By the way, if you haven't already, be sure to smash that like button nice and early and hit subscribe if you're not already subscribed. First of all, before I get into the charts, I need to ask anyone who has been to Iceland before, is there such a thing as post-Iceland depression? Because ever since I've got back, like, my life is just not the same. I thoroughly enjoyed being in a place that was the epitome of health. Like, I cannot describe how amazing Iceland was on a personal level, on a self-care level, on a healthcare level. It was one of the most amazing trips of my life, and I really cannot wait for you guys to see the vlog. It was crazy, nature-wise crazy, but I think I somehow planned that trip in the best possible way, because my last few days ended in just being treated like an absolute princess, treated by myself. But I really thoroughly enjoyed Iceland. So in coming back to Dubai, it's just not the same. I am craving that kind of, geothermal spas and the facials and the massages and the really healthy food. So yeah, it's such a cool trip, and I'm going to try and get this vlog edited and out to you guys as soon as possible, because I want you to experience it. It was seriously, if you've never been to Iceland, like, you have to put it on your bucket list, because it's a once-in-a-lifetime thing to do. But that's not what you're here for. You are here to talk about the chart. So let's have a look at that, because this is what we are currently looking at. And look, I have to say, this little move here yesterday was a bit of a scary one, but we're going to get into it. Let me go back to the weekend, give you a quick refresher of what we spoke about on Sunday. There was a couple of things that I told you to look out for in this consolidation area for the false move week beginning. And at the time, we didn't have confirmation of which one was likely to happen. So I gave you a range of scenarios that kind of were based off these liquidation levels that were closest to the box should price break out one way or the other. So the one that actually ended up playing out, we can see here, was price came down first. This was the big stop hunt in the dead gap zone. And that stop hunt took out our lower level of liquidity that we spoke about at the 42,270. So everything basically got taken out on that wick right down there. So now that we know they're taken, we don't actually need those on our chart anymore. I just wanted to show it to you. That was what I was talking about on the videos, the lowest hanging fruit. And then as they took that, that's when you then look for a W formation, which it was a tricky W formation, because it formed the first peak in the dead gap zone and the second peak at the very opening of Asia. So it kind of depends if you're willing to take trades where part of the trade forms in the dead gap zone. I tend to not take trades if the entry is in the dead gap zone, but the entry wouldn't have been. The entry was here after this candle, and so that would have been on the opening of the Asia session. So we just kind of made that in as being a actual W formation. And then as the day played out, what you need to wait for on a Monday is to see if the move that follows your W or M formation, is that going to be the start of the 3-day trend, or is it a 1-day move that ends up changing trend? And so as we were watching this in our Discord yesterday, what I did notice that we did have on this side here, we had 3 pushes to the upside. So we can see a cluster of green here, a cluster of green here, and then a cluster of green here. So that was our 3 pushes. And essentially all of that could just form a level 1 rise on a higher time frame. So a level 1 rise usually will have 3 hits on a lower time frame. So you're looking for 3 clusters of high volume that come in to form that rise. Now, the thing about this, I put a warning out after we had hit that high, because where we hit the high, if you look here, was at the very, very end of UK and The US is notoriously known for reversing trends. And in addition to that, the high that was hit at the time actually came back to the high that was created over the weekend. So when we're looking for a target, we're looking for highs and lows of a previous day. And if that previous day was on a weekend, we kind of consider the whole weekend as the one kind of cluster of price action. So this here was, I actually put this warning out in Discord here where I said this price action at US is moving too fast. And so what I meant there was this move down. So I had posted that update here when we were still in the gray candles. It's possible the upside is over, especially because it took the upper level liquidity at 43,547. Now that was this spike here. So we had talked about that level as well on the Sunday update. So they came and took the downside liquidity, then they pushed to the upside to take this upper one as well, which is really quite cheeky, but that's what they do. Then I cautioned that it would be worth either taking partial profits on any longs or just moving your stop loss at the very least to see if we do get a retest. There's no shorts from here whilst it's moving at speed, but let it settle and retest something. And if that retest creates a lower high, then we can short. So let's assess that. So that was posted here in the gray candles. Price did continue down. And this low here was actually a higher low in comparison to this low here. Now, for me personally, I tend to not take into consideration the last half of US session price action because the last half of US session is usually just consolidation. Price usually just consolidates to the end of the session, and you can see that happened here. So if I don't have a trade within the first 3 hours of US, which if you add the market session times indicator, that's what you're seeing at the bottom down here, free indicator, buy, trade, travel, chill, you can add it, and anything that's in the turquoise colored circles down here, to me, that's a tradable time zone. If price is going to reverse in the US, it will happen usually within those 3 hours. So that's where you're going to get the most action. After that 3 hour mark, that's when I tend to call it a trading day. And if I don't have a trade by then, I'm basically done for the day and I come back the next day, somewhere around the end of Asia, to look for a new trade. So after we got to this point here, that's it. I didn't watch this price action anymore. Wake up the next day and I can see that there was a high low. So now what I'm thinking this whole thing here is now a multi-session, or it's not a multi-day actually, because it was dead gap zone to the second peak end of US. It's actually still just a multi-day potential W formation. And I'll tell you why that makes sense, because let me put that back. When you're creating W formations, the insides of each side should have the 3 hits to the high. So this is the 1, 2, 3 that I just mentioned to you, and that is on the lower time frame. So that means if I can see the 3 hits on the 15-minute, then this should all equal the inside left side of a 1 hour W. And then the same thing happens here and the same thing happens here. That's how this is going to turn out. So we can see that there was a hit here. And look, when it's a hit, it can be a single candle or it can be a cluster of candles. Because there's a gray candle in between there, I'm going to count this magenta as one on its own. And then this is another. So we have 3 to the upside, creating the inside right side. 3 to the downside, creating the inside left side. I know this is confusing. I am one of those people that you cannot watch on 2 speed. If anything, you have to slow it down if you really want to learn. But bear with me, over time it will start to make sense. Now we want the 3 hits to the outside right side, which should be, if we get them, the 1 hour right side of the W formation, which also is level 1 rise. So I can see a hit here, and I can see it here, and I can see it currently here. There is a problem with this, which I'm going to explain in a second, but I want to show you now that you've identified all of those on the 15-minute time frame. If we zoom out to the 1 hour time frame, now you can see much more clearly the W formation on the 1 hour time frame. So I hope that makes sense. It's a really easy way to identify W formation is if you can count the 3 hits on the 1 time frame lower to whatever time frame you're trading. Now that you know that, let me tell you the problem with this W formation. The problem currently is that the middle peak of a W, which would be this, has to break before a W has a chance of being confirmed. So there's 2 things that confirms a W. That is the center peak getting broken. So that means that this side here has more work to do. Then once it's broken, we come back and get a retest. And that retest creates a higher low, which usually retests something that is important. So what's important is an EMA. So the EMAs might do this. And if we got a retest there, that would be right. It can retest an unrecovered vector that's just been created on the right side of the W. So it could be there. Or it can retest an important level, being the initial high of the day, the high of the day, or something like that. So whilst this is starting to form and starting to look good, it is not there yet. And I'm actually not going to talk for too long because I want to get this out before it does any of these things. But I tell you why I have hope for this breaking out, because when I zoom out on this, look at the retail pattern that we also have going on. We have here a symmetrical triangle. So retail should be waiting for a breakout to the upside at this point in time. Why the upside? Because when we zoom out even further, the push before the triangle was to the upside. So a symmetrical triangle is a continuation pattern. So retail should be believing that we're going to break to the upside, which begs the question, well, if retail are going to go long, won't market maker go short? Yes, but they'll be going short at the least amount of contracts possible just to fill your long orders, because all of this will work out to be a even higher time frame, rise level 1 into consolidation, into rise level 2. They're going to let you believe you're winning in level 2. Level 2 is where most retail do jump on. Then the latecomers, the amateurs, the people that are still learning, that have the anxiety when they take the trade. We've all been there, you know. They get on at level 3. They're the ones that are first to get wrecked. At level 3, that's when the market maker adds their biggest short positions. Until then, they're basically dollar cost averaging. They're just at the lowest amount possible. They're matching every side of retail order to allow you to believe that we're going to keep going. And then once they've built enough contracts, they add their biggest position at level 3, and that's what eventually reverses the price. So we didn't have to worry about that. We shouldn't have to worry about that until we're close to a level 3. The hardest part of the method is working out level 3 on what time frame, right? So sometimes you get that wrong, right? Like it doesn't matter how long you study this method for, sometimes you're just going to get that wrong. But when I look at this does look to me like the 15-minute is forming the right hits to create me the 1 hour W. The 1 hour W is in towards the end of a retail pattern that is a continuation pattern after I can see rises here on the 1 hour time frame, that all these 3 rises would lead to a 4 hour 1 level rise. Stay with me, because the model, it's the same model. All it does is feed up in time frames until it's at the highest time frame it wants to be at. So what do you do with all of that information? Well, let's now zoom back into what's going on with the current price action. At this point in time, retail are waiting for their symmetrical triangle breakout. So how do retail trade symmetrical triangle breakouts? 2 ways. A good advanced retail trader usually will take their entry within the triangle, and they can do that 1 or 2 ways. An aggressive, good advanced trader will take their entries actually on the support line after a third confirmation, so a third touch to their support line. So we've got 1 here, 2 here, we are on the 3rd. So a good advanced trader would probably already be long. Another way that they could do it, which is just somebody who wants a little bit more confirmation but still would be a decent trader, would be within the triangle. They're now waiting for a higher low here. So that entry hasn't presented yet. So if a higher low forms anytime soon, there should be more retail traders jumping on. Now, for us who trade that method, that would also be an entry if you're not already long, providing it's a successful retest. And instead of it being a higher low created within a symmetrical triangle, what you are actually looking for in this method is a retest of the 200 EMA on the 1 hour time frame, or 50% of Asia. And as you can see there, that is 42,750. So somewhere around that level. Again, don't get married to the exact number. You are just looking for how the candles present if we do come down and retest around that zone. If you get bullish kind of candlestick formations, there's your entry if you're not already long, providing it holds. You shouldn't have to rush in on it. It might come back, consolidate at Asia for a little while. You'll get to put your stop loss, depending on if it's a stop hunt move that takes you down to that area, you'll get to put your stop loss under the stop hunt or under the 200 EMA. That should pretty much be enough. So right now, I can't tell you where this is going to settle, obviously, but I can give you an example kind of setup. Let's just say we do present an entry at around 50% Asia. A stop loss would only really need to be under the 200 EMA, probably under this wick right here of this candle, but it doesn't hurt to be safe, guys. So even if you moved it down here and cleared this, fine. Or depending on the risk to reward, you could even just move it down under the second peak of the W and give yourself like a lot of room in your stop loss for it to potentially spike down a little bit lower. Maybe it will touch the trend line again, and at least you're not stopped out and then it actually goes your way. So there's a couple of options on stop loss there. For me personally, depending on how the candles looked at the time, I would most likely put it under this one right here. So with that in mind, then I get to go and have a look at my target to the upside, and the target has to be the next key area. That's an initial target. It doesn't mean you have to close your trade there. It's just an initial target. And so the initial target currently will be the high of the day, which is yesterday's highest point the price went, which is 43,580. And that's going to give me a 3.8 to 1 risk to reward trade. Now, should price actually give me all of that, get the retest, get the trade, I would reassess. I wouldn't automatically take profit there. I would reassess, because an area that has my interest right now is actually the high of the week up here. And the high of the week is at 43,888. And there's a liquidation level right near there at 43,924. So if this wasn't looking like it was going to do a bearish reversal at the high of the day, I would try to stretch this trade a little bit further to the high of the week. And then I'm repeating the process. If we get through the high of the week and everything is still looking fine, we might have an initial sell-off, but it holds the structure. We're still creating higher highs and higher lows. I don't have a reason to exit. It's not yet midweek reversal time, so everything kind of looks okay. Then I'd be looking to stretch the trade even further to the next liquidation level, which is currently sitting at around 44,400, giving me now a 7.5 to 1 risk to reward. And then there's another liquidation level up here at 45,096. Same thing, as long as I'm still creating higher highs and higher lows, I would stay in this trade and then I'd be able to stretch it up to the next liquidation level. Now look at this. Now I've got a 10 to 1 risk to reward. And this is something I was talking to a few members of the community about the other day, that when you're learning to trade, a lot of typical technical analyst courses will teach you about the minimum risk to reward that you need. Meaning, if you are going to risk 1% of your account, you at minimum need to set a trade at a target of a 2 to 1 trade, for example, right? So for every $100 you risk, you should make 200, and then you can work out your win rate that you would need in order to remain profitable, with that being your minimum risk to reward. This is the thing most people don't focus on. They focus on how much percentage the price moves, which is not how you should calculate your risk to reward. On an example of this exact thing, if the price went there, that's only a 5.5% price move, but the actual risk to reward on this trade is 10.7 to 1. That means for every $100 that I'm risking, if this trade was to go to my target, I'm making 10 times that 100. I have to do a whole video on this, because every time I talk about it, I get questions in the comments saying, but are you on 100x leverage when you say that? It's so dangerous. No, it's actually got nothing to do with leverage. And I will explain it properly, because this is not covered enough on the internet. But just trust me when I say that it's not about the price percentage movement. It's about your risk to reward, if you know how to properly calculate your risk to reward. So when you compare that to what you're normally, I was not meant to go down this road on this video. This was meant to be a quick update of like where to get an entry. Anyway, but when you learn how to define your minimum risk to reward and the win rate that you need, then it goes to show, when most people are teaching you need a minimum of 2 to 1, that means that in order for you to get the same results in 3 days, because this should be a 3-day swing. So in order for you to get the same result in 3 days, you would have to take 5 trades at a 2 to 1 risk to reward and win them all. right? Because it's 2 to 1. Whereas I'm telling you here that we could potentially have a 10 to 1 risk to reward in one trade that we really only have to nail the entry on potentially sometime today. And that's providing you're not already in from the W, by the way. This is a second chance entry. But you nail that entry, there is a potential, if it does keep going to our highest liquidation level, that you now get the next 2 days off until Thursday as you are waiting for your trade to play out. And you don't have to be looking for another 4 entries like someone who only aims for a 2 to 1 risk to reward. So if you want to understand why this method is so powerful, that's why, because this doesn't happen every week. Of course, the price is not like normal and easy every week. Otherwise, everybody would be trading and they'd be rich and nobody would have any other job in the world. So of course, it's not easy. But as a general rule, if you can get a swing like that, a 3-day trade both ways in an average week, that is an insane account growth. And that is why you don't need to trade a lot. We don't need to be the people who is getting 5 trades in 3 days in order to make the same money. We only need to be patient and strike when the time is right and get that one really, really good trade, and then just relax until the middle of the week and try to get that other one really, really good trade back down the other way. Rant over. Let me just quickly talk about ETH, because I did tell you that ETH was going to be the easier trade this week, and that if Bitcoin wasn't being clear to you, to keep an eye on Ethereum. Ethereum is what's making me a little bit more hopeful for upside right now than Bitcoin is, because first of all, I said keep an eye on ETH BTC on the higher time frame. So on the daily time frame for ETH BTC, we talked about this 50% vector level at 0.05325, and so far it's still held it. Since Sunday, we've still held it, and it looks like we're trying to move back, back to the upside from it. A nice cross above the 50 EMA would be great, but so far this is actually looking good. And if it continues on the path that it's going, then yeah, Ethereum's going to be the one that kind of leads these moves, and it's going to help you to trade everything else. So my thesis is still the same, to keep an eye on what's happening with ETH BTC. And so now that you know that, we can go to ETH USDT, and looking again at the higher time frame for ETH, we can see it's the same thing. So this is where people that trade retail will be starting to say breakout imminent. But on this channel, we're already in pretty much, because we know how to identify the false move week beginning and then get our trade from the start of that week. So let's go to a smaller time frame to have a look at ETH and see how much clearer Ethereum is. So with Ethereum, our weekend box is here, right? We spiked down on the 15-minute time. I'm on the 1 hour time frame right now, but on the 15-minute, I'm telling you that this would have looked like a 15-minute W, right? Just trust me if you don't, I'm profesh. And anyway, that led to a rise. And then here is our retrace, and we're now in another rise. I feel like Ethereum this week is basically textbook, and it's very, very easy to trade. So if you're not in on it, what you would be waiting for now is the same thing, really. We are waiting. Currently we've got a high of the day rejection. Fine. As long as it maintains structure, we're good. So if we get a little bit of a pullback and we come back to retest anywhere around Ethereum's 50% Asia, and we create a higher low there, it could also be a 50 EMA or the 200, then we would expect that we are going to break out next. Asia's 50% is at $2,314 odd. So somewhere between there and the 200 EMA, which is, it's about 2,300 currently. So if we got a higher low anywhere around there, that could be a potential entry for a long if you're not already long on Ethereum. If it breaks below that, just always remember, anything, if price is the opposite to anything I'm saying, that's the invalidation. So we just don't enter, if it meets our conditions, we enter. If it doesn't meet our conditions, that doesn't mean we bag flip. It means we sit out and wait a little bit longer. That's how we do it over here on this channel, because we don't want to guess. It's either following the model that we understand, or it's not, and we sit out and wait a little bit longer. Now, if all of that does happen, again, that just means that ETH is going to break the retail triangle, and that's where everybody else jumps on, and that is what helps our trade move into that profit faster. And that's how we get the 10 to 1s, guys. That's how we do it. We know the secret. So there you go, guys. That's really all I have to say. I won't get into too much more, because I think these entries are probably going to present, soon. So I want to get this out for you guys to watch. The final thing would be that if we do get that breakout on ETH, the target's going to be the high of the week initially. The high of the week is at $2,393. And then again, same thing. If there's a little rejection there, but we maintain higher highs and higher lows, you stay in. It's a good spot to take partial profit though. Or if we get a stopping volume candle and it's looking like a bigger sell-off, then you exit the trade and we start looking for something else once that settles. If you learned something new in this video, you enjoyed this video, be sure to smash that like button, hit subscribe if you're not already subscribed, share it with a friend who may be failing at trading right now, because you know what, there's no need for that. We want to educate you to the best of our ability. That is our mission here. I want to see successful traders, and I especially want to see that happen throughout the bull market, because it's crazy to say, but there are so many people who walk away from bull markets with nothing, and we're not going to do that on this channel. So I'll see you guys on the next update.